what is happening to the stock market. And also, let's have a look at corn. This and more in today's video. Welcome to myfinancesteacher.org. Let's have a look at the S&P 500. And as I mentioned to the members at myfinancesteacher.org, I expect the general stock market, mostly I'm looking at S&P 500 as well as nasdaq, to start trending higher over the next several weeks. To recap what I've mentioned over the last several videos is that I think the general stock market gave us the end of the previous intermediate cycle over here in early March, although the decline into that intermediate cycle low was only about a 6% drop. Nevertheless, since then, the strength of the market suggests that it was an intermediate cycle low and that decline was within the expected time frame of the end of the intermediate cycle. These cycles usually last for about half a year, and the end of the cycle came after 161 days. So the new cycle so far, starting from early March, is only 76 days long. And as the cycles usually last for half a year, I think there is a pretty good chance for significantly higher S&P 500 over the next several weeks. Now, stepping down into the shorter term daily cycles, usually these cycles, the duration varies quite a lot. They last anywhere around 2 months. And I think that this big red candle on the 12th of March has a good chance to turn out to be the end of the previous short-term daily cycle in S&P 500. So far, S&P 500 hasn't really moved much away from that March 12th low, but yesterday we saw S&P, while dropping down below 50-day moving average, it recovered back above that 50-day moving average pretty quickly, all within 1 day. So while nobody knows the future, it is also possible that S&P 500 just continues down from here for perhaps another few days, extending the ongoing short-term daily cycle, say to over 80 days, in which case the next support zone for S&P 500 would be this previous high at around 3980, 3990. So while this is a possibility, and since nobody knows the future, I still hold a significant amount of cash in my portfolio in case if another discount comes up with the general stock market. At the same time, I'm also already positioned pretty well into SPY and triple Qs to take advantage of the upcoming new rally into the new daily cycle and into the middle of the intermediate cycle. We see that S&P 500 has already poked below the Bollinger Bands a couple of times, and actually, because Bollinger Bands are still pretty narrow, these pokes below the Bollinger Bands are not really that significant. So because I think we are pretty close to the end of the ongoing daily cycle, perhaps the daily cycle actually finished several days ago over here on the 12th of May, I currently don't have a stop loss on SPY or triple Qs, even though nobody knows the future. Of course, you still have to track what's going on in the stock market and try to be agile if things are really breaking down. What I think is likely to happen over the next few weeks is that S&P is going to recover to new all-time highs sometime into early summer. A similar situation is on nasdaq, although it's even more attractive at the moment because the several pokes below the Bollinger Bands are actually taking place when the Bollinger Bands are already pretty wide. And what this means is that these pokes below the Bollinger Bands are somewhat more important in forecasting a possible reversal in this downtrend into the rally into the new daily cycle. So the S&P recovering its 50-day moving average within 1 day is a positive sign, and once NASDAQ recovers its 50-day moving average, that will likely be a good sign for this upcoming rally. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Next, let's have a look at the market sentiment. It's very important to try to be cautious when a lot of people are too enthusiastic about the market, and it's usually a good idea to start accumulating some positions when people are too pessimistic. Generally, It's a good idea to start entering the market when this optimism index drops far lower than it is right now, around 30. But over the last year, since the trillions of dollars being printed all through 2020 and 2021, the optimism on the general stock market hasn't been allowed to drop all the way down to that level of 30. So we have to work with what we have, and the optimism on the markets right now is pretty low. It's at 53, which is actually lower than the market sentiment back in two previous intermediate cycle lows. And the previous two cycles, as I mentioned, are over here in early March. You see optimism index is higher than it is right now. And in late 2020, the optimism index is similar to where it is right now at the end of the intermediate cycle low. So I think the market is scared enough for you to become somewhat greedy. Although, remember, nobody knows the future. Next, also, let's have a look at corn today. And over the next few days, I will try to review a range of other commodities. Looking at corn, it looks like corn is getting ready to finish its ongoing cycle. Unfortunately, I was extremely unlucky and a little bit inattentive with corn. I entered into corn somewhere around here in early this year with a very tight stop loss. And unfortunately, I was thrown out of the position over here at the end of March, just before this strong rally in corn started. But it still would have turned out well if I was paying attention to what was happening to corn. Sometimes, though, you are a little bit busy and can't really watch out for every chart. So looking at the corn cycles, generally over the last several years, the corn cycles lasted for just over 4 months. The ongoing cycle is nearly 4 months old. There is a chance, I think there is perhaps a pretty good chance, perhaps a 40% chance, that this previous cycle in corn did finish over here on the 17th of May. The cycle lasting for 112 days, which is a little under 4 months rather than the usual over 4 months. But it would still be not extraordinarily unusual, because cycles do sometimes last for just over 3 months, as it did over here, for example, in the middle of 2020 and in late 2019. So a pretty good chance of a new cycle rally starting anywhere from here, and corn basically bouncing from close to its 50-day moving average. On the other hand, I think there is a slightly better chance, I would say perhaps a 60% chance, that corn continues a little bit lower within its ongoing cycle. I would really like to see corn to poke several times below these relatively wide Bollinger Bands. And as I've mentioned, such pokes usually indicate a possible reversal from the downtrend into a rally. That would bring the cycle closer to its usual duration of around 4 months, and it could also perhaps bring the price closer to the next support zone below the 50-day moving average at around this consolidation price. The highest range of this consolidation is around 580. Next, let's have a look at the optimism index on corn. And as you see from history back in mid-2020, usually it's a pretty good idea to start accumulating some long positions on corn when people are fearful, when the optimism about corn is all the way down near this green line around 30. But again, since 2020, with trillions of dollars being printed, the prices are not really allowed to correct significantly, and the market is not allowed to go too far into fear territory. Right now, the optimism index is at 62. It's actually pretty similar to the level of optimism on the market at the previous cycle low over here, somewhere in early 2021. Although looking at the cycle low before that, that would be in mid-2020, the cycle low over here in August did come with significantly more fear on the market. So let me just leave you with this question. Do you think corn should correct a little bit more, or do you think trillions of dollars being printed are ready to move into commodities and prevent too much correction? Let me know what you think in the comments below. While I'm pondering, do I actually want to take small positions on corn here for that 40% chance of a rally, with more cash ready to add to corn positions if it drops lower into this upcoming cycle low. So while I'll go think about that, you go type up your opinion in the comments. Remember to hit that like button, subscribe to the channel, and of course, good luck in your trades.